Hey there, welcome to another episode of the BlockCrunch podcast, where we share condensed insights from builders, entrepreneurs, and investors in the world of crypto. I'm your host, Jason Choi. And I'd like to take a moment today to talk about open source. Now, open source is not just a great model for which software can be built, it is also an ethos in the world of cryptocurrencies and crypto assets, whereby teams and individuals from anywhere in the world can essentially contribute together to the same project and build something amazing. However, open source is not without its problems. In fact, when I was doing research for this episode, I realized that one huge issue for the open source world is the issue of the tragedy of the commons. Now, what open source means by definition is that anyone can change, study, or distribute a piece of software. But what that leads to, potentially, is that only a handful of developers are contributing their efforts to a piece of software. They are expensing their own resources and time to create and maintain pieces of software, whereas everybody else just free rides off their efforts. And there have been quite a lot of solutions proposed in the past to solve this misalignment of incentives. And some of these solutions have even been funded by big-name VCs as well. But one interesting solution that a lot of crypto projects are relying on is called Gitcoin. So I'm incredibly excited to invite the founder of Gitcoin, Kevin Owocki, onto this show to talk about open source and how blockchain, specifically Ethereum, might be used to solve this problem of the tragedy of the commons. But before we get started, I'd like to give a shout out to Ben Sparango for making the introduction between me and Kevin. Definitely follow Ben on Twitter at BennyBitcoins. He shares a lot of great insights about the blockchain world in general. So with that being said, let's buckle up and dive right in.
This is this worldwide phenomenon.
We are incredibly lucky today to be talking to Kevin Owocki, founder of Gitcoin. Gitcoin is a platform for developers to find paid work on open source projects. Startups and projects can pay bounties for development and coding tasks in Ether, the native asset on the Ethereum blockchain. And Kevin's work has also been featured on TechCrunch, CNN, Inc. Magazine, The New York Times, Wired, and so on. So I'm incredibly excited to be talking to Kevin. So Kevin, welcome to the show.
Thanks so much for having me, Jason.
Of course. So just to start us off, can you walk us through what your background is and very briefly explain what Gitcoin does?
Yeah, I'd be happy to. So I'm a software engineer from the East Coast of the United States. Got a degree in computer science in 2006 from Delaware. Go Blue Hens. And I spent my first couple years out of school working in corporate America, and I just hated every second of it. So I took the plunge in 2008 and started working in startups. I actually got an opportunity to go through Techstars, which is a seed stage accelerator out here in Colorado. And I've just sort of been in love with startups and seed stage stuff ever since. Fast forward 10 years, the blockchain space really started heating up. And through my experience in the startup ecosystem, I had sort of realized that all of these startups are built on top of open source software, but there isn't a really, really good way to sustain open source and to grow open source because the expected value of open source is free. And it provides billions of dollars a year in economic output, and I just think that that's a huge gap in terms of funding. The expected value is free, and there's billions of dollars of economic output created by open source. So the reality is somewhere in between, and Gitcoin aims to solve that problem by allowing people to put bounties on open source software that are denominated in either Ether or any Ethereum-based token. So it's basically the incentivization layer on top of GitHub's collaboration layer.
Yeah, and there was a report 2 years ago, actually, published by the Ford Foundation on the state of open source that also summarized the main challenges facing open source. And one story that stood out to me the most is in 2014, actually, there was a vulnerability affecting 500,000 of the internet's secure web servers called Heartbleed. And it was found in a software library called OpenSSL. And it was because of that vulnerability and all the news coverage that was given to it that people started to realize what OpenSSL is and how heavily it is relied upon by so many things. And they were shocked to find out that it only has one person working on it full time, despite it being a globally recognized project. And I think this example really illustrates the issue that Gitcoin is aiming to solve. And to put it in more generic terms, right? Fundamentally, digital infrastructure has a free rider problem. A lot of resources like OpenSSL are offered for free and everybody uses them. So nobody is really incentivized to contribute back, figuring that somebody else will step in.
Yeah, and I think your story about OpenSSL is a really great one. I remember, I think it was called Heartbleed, if I recall, and I remember trying to patch my systems like 2 or 3 startups ago when that happened. Yeah, so I mean, I think that the bottom line is that we think that blockchain is a game changer for funding open source, and I'll give you 2 reasons for that. The first is a more abstract reason. If you have programmable money, which is what we think blockchain is. It's this new internet in which there's an incentivization layer to everything, and it's completely programmable, Turing complete on top of the money. Then you can basically program your values into your money. And so, if we value open source software, then we can program incentive structures for maintaining that open source software into our money. So that's sort of the abstract theoretical answer of why blockchain is a game changer for open source. The second, more tangible reason is that 2017 was a bull market for cryptocurrencies, and we saw the crypto market itself go from tens of billions of dollars to hundreds of billions of dollars. I think the market cap of all combined cryptocurrencies is around 350 billion right now. And because of that, there's a torrent of funding for developers who are working on open source software. And there's just never been this amount of funding for open source software before. There's always been too little dollars chasing too many developers. And now, because of blockchain, there's too much money chasing too many developers. And because of that, a product like Gitcoin, which is an efficient way to deploy capital if you're trying to hire developers, and if you're a developer, it's a way to get paid for your open source contributions, to build your skill set, to meet people in open source, and to get paid while you're doing it. So it's sort of like a double-sided market that takes advantage of this game changer in open source funding in order to help push the blockchain system forward.
So when I was researching for this interview, Kevin, I realized that there have been many attempts to add some sort of incentive alignment in open source work. And many of them seem to work and are backed by recognized VCs, but they are actually not using crypto. And to give you and our listeners some examples, there of course is Patreon, which is a crowdfunding website, a generic purpose crowdfunding website. But it helped Evan Yu, who is the creator of the popular JavaScript front-end Vue.js, get $180,000 in donations every year so he can continue his work. And there's also TideLift, which allows companies to pay developers to maintain open source software that they depend on in exchange for quality assurance from these developers. And there is also Open Collective, which I think is a genius idea, which allows open source projects to create collectives where they can collect donations and then distribute them in a transparent and public manner online. So I'm very curious, have you looked into some of these alternatives? What are your thoughts on them? And what made you decide to use cryptocurrencies and blockchain instead, given how a lot of these existing solutions have not used anything like blockchain and they seem to succeed pretty well?
Yeah, first off, appreciate you doing your research. And second off, I'm a big fan of TideLift. I'm a big fan of Open Collective. There's a project called GrataPay that has been around for a while, and I'm a big fan of them. And so I think that they're really working on similar missions, and I admire them because of that. I think that the reason that Gitcoin is focused on crypto is because you skate where the puck is going, to borrow a quote from Wayne Gretzky. And we fundamentally believe that blockchain technology is the next generation of the internet. So if Web 1.0 was the read web, and then Web 2.0 was the read-write web, then Web 3 could be the unmediated read-write web, or we've also been calling it the Internet of Money. So if you think about the changes that the internet has had on our infrastructure as a world over the last 20 years, and how it's completely changed the way our media and and the way we exchange information with each other. And you realize that that's just because of the core protocols of the internet allowed computers to exchange information across the network without an intermediary. And you think about what blockchain is. Well, blockchain is just the ability to exchange value over a network without a centralized intermediary. And so what kind of changes will that portend for the world if we're able to exchange money over the internet in a peer-to-peer fashion? what Napster did for the record company. I'm sorry, what Napster did to the record industry is what blockchain could do to finance, and I think that that's a huge opportunity. And the reason that Gitcoin has made a strategic bet on cryptocurrency is because we want to be part of that change. We want to ride that wave into solving the problems with open source software. And that's not to say that there's anything wrong with doing it in the traditional financial system. I think that there's certainly barriers to entry right now in crypto. It's very volatile. You have to figure out a wallet and private key management. You have to figure out what a block is, what gas is, and because of that, there's definitely a barrier to entry for our users to figure out how to use the system. But our bet is that the barriers to using crypto over time are going to start to be less and less. And once those barriers are completely reduced, then we're going to have one of the best products on the market. So that's sort of the hope. But we'll see if it comes to fruition over the next 5 to 10 years.
And to dive deeper into that, why did you choose to use Ether, the native asset on the Ethereum blockchain, and not Bitcoin or even other cryptocurrencies that are perhaps more meant to be currencies?
Yeah, that's a really good question. I think that Ethereum has a massive amount of momentum right now in the developer community, and our use case is focused on developers. So Ethereum has, I saw an article the other day by ConsenSys Media that said that Ethereum has 50 times more developers than the next biggest blockchain platform. And so I think that it's great that Bitcoin was the first mover in the space. And I think that it's great that they're moving into a store of value sort of value proposition for their use case. But I think that when you're building a solution by developers for developers, you're going to go with a platform that's the friendliest to developers and has the most momentum for developers. Not to mention that if you look at CoinMarketCap, which is an indexer of all these different cryptocurrencies, of the top 100 cryptocurrencies, there's almost 50% of them that are Ethereum based because you can launch tokens on the Ethereum blockchain. So I think that because of the momentum the Ethereum ecosystem has right now, that's why we made a strategic bet on Ethereum. But I'll be curious to see what happens as the ecosystem matures.
Now, one thing that I find really interesting, Kevin, is that you seem to be pretty opposed to having your own token for Gitcoin. And on your website, you mentioned that ICO and tokenization are not the best business models for building a DApp. And you voiced some concerns about ICOs in an interview before as well. Can you explain your thoughts behind this? Why didn't you launch a token for Gitcoin?
Yeah, so I mean, I think that ICOs are a really revolutionary thing for fundraising and for funding a project that's just getting off the ground. And I fully support people who want to get their project off the ground by using crowdfunding instead of traditional VC or financial system. But I think that a lot of the ecosystem is not being honest with themselves when they try to sell utility tokens to their customers. Basically, the use case is I'll sell 1 million tokens, and each of these tokens can be used to use X feature on my platform. So what you get for consumers in the blockchain ecosystem is basically thousands of different currencies that you can only use at specific applications. And I just don't think it makes sense for 95% of those to have to use those tokens on those platforms instead of just using real money that has liquidity that you can cash out and like pay your rent with. So, I mean, I think that the reason why on Gitcoin we don't have a token is just because I think that there's a mixing between utility tokens and security tokens. And I also think that it takes too long if you want to use a dApp to read an entire white paper to understand the complex game theory and token mechanics that dApp implements. Why not just use Ether? So I'm actually, or Ether or DAI or USD Tether or some stable coin. And so I'm actually on the working group for ERC 948, which is subscriptions on the blockchain. So the use case for that is that you will, like with Netflix, you pay $10 a month, and it's very easy to make a purchase decision with Netflix because, I'm only committing $10 and I can just cancel next month if I don't like it. Whereas with tokenization, you have to read a white paper, you have to understand the vesting schedules of the founders. And so it takes much longer to make a purchase decision for a consumer. I also think that from a company's standpoint, subscription models are way more healthy because you can manage your cash flow. So I know that I have X subscribers, I have Y churn rate, I have Z conversion rate. I can tell you what my cash flow is going to be in July of 2019. And we're recording this in July of 2018. And if you're doing an ICO, you have no idea what the cash flow of your company is going to be in a month, much less in 12 months. And you don't even know how much cash you're going to have on hand because you just raised $10 million in an ICO, but it's all in Ether, which could go down 4x tomorrow or up 4x tomorrow. So I just think that business models in crypto are kind of broken, and that instead of just being a Me Too ICO, why not try to beat another path down and create a more healthy dynamic for the entire ecosystem? And that's what we're trying to do with ERC 948, the subscription standard on the Ethereum blockchain.
And also, one of my favorite projects is Numerai, which I recently started looking more into. And they have a quite similar, philosophy to Gitcoin in that they are paying bounties to data scientists. They basically incent data scientists to predict stock prices and ask them to stake their tokens. If they're wrong about their predictions, their tokens get taken away. If they're right, they earn more tokens. So I'm curious, have you experimented with these alternative models and other bounty models for Gitcoin?
Yeah, I mean, I think that, so I should mention at this point that we were very fortunate to be funded by ConsenSys, which is the largest blockchain accelerator in the world. And I think that a lot of projects in the space that are just getting started don't have that kind of backing. And I think that if you're going to raise money for your project, then it makes sense to consider doing an ICO. But I don't know enough about Numerai's use case to really comment on their use case, and let me just say this: I've never seen a utility token that, from a consumer, has been attractive for me to hold or to really use. And I think that that's a function of two things. I think it's a function of the conflation of utility tokens and security tokens. But it's also a function of me spending 11 hours a day building the best damn use case or user experience for Gitcoin that I can. And so I don't spend a lot of time speculating on other people's tokens. But to answer your question directly, we did consider an ICO when we first launched the project, but decided against it for all of the reasons that I mentioned.
And pulling this to a higher level, one thing that I think is really interesting that you talked about before in an old interview is that the economic value of software has been decreasing, meaning it's harder to sell licenses to software, but the strategic value of software has actually increased. So can you explain this a little bit and how open source relates to this?
There's kind of like a demand curve in software where people don't want to pay for open source software, but then when they need something done, then they'll pay anything. And I just think that, it's a funny market because, if you can get something for free, then you're not going to pay for it. But you can't pay software developers nothing. So if you need something done custom, then you're going to pay for it. And so I think that the strategic value of software is that software is eating the world, and that it's increasingly important to have a digital strategy and to have a blockchain strategy. But the economic value of software being zero is because everything's built off of open source these days, and the expected value of open source software is $0. So I think that the truth lies somewhere in between, and I'm hoping that we start to build a market that closes the gap between the strategic value of software and the economic value of software. I would just recommend to your listeners, if they're interested in knowing a little bit more about this specific part of the conversation, the book, The Software Paradox, which you can find on Amazon, is really, really good. And that's what informed a lot of my thinking on this topic.
And that wraps up another episode of the BlockCrunch podcast. So I hope you learned a thing or two about open source as well as Gitcoin. And for the next episode, we'll be talking something completely different that I'm incredibly excited for, and you're going to have to wait to see what it is. And once again, I've been your host, Jason Choi. You can follow me on Twitter at Mr. Jason Choi. That's MrJasonChoi. And if you haven't already, please do subscribe to this podcast so you get notifications for the next episodes, and give us a 5-star rating so we can get this out to as many people as possible. With that being said, this has been the Block Crunch podcast, and I look forward to sharing more with you next week.